Hi, my name is Alan Porter. I'm the owner of Strategic Wealth Strategies. I'm a certified financial fiduciary. And what I want to show you today is the Smart Advisor Debt Free for Life program. We've all heard about Dave Ramsey, Susie Orman, they're debt free for life, but this is a debt free for life program that's on steroids because it gives you tax-free money at the end. So if you'll bear with me, I have a short PowerPoint presentation to share with you, and I'll get this up in real quickly. All right, we'll go here, slideshow from the beginning. All right, if you bear with me a couple minutes, I'll show you how this program works. Understanding the debt snowball, it's a debt elimination strategy. That's all it is. The traditional debt snowball is an action. Let's say that you have three bills. You've got a credit card with a balance of $1,847, a student loan with $22,318, and an auto loan of $27,905. Your credit card payment is $71. Your student loan payment is $643. Your car payment is $413. Your total monthly minimum payments are $1,127. The debt snowball, what we do is we take extra cash that you pay in, and we'll pay that loan until it's completely paid off. As an example, $500. And once that's paid off, you direct all that money to this student loan. And once that's all paid off, you'll direct all the money that you're making on your minimum payments and pay your Jeep off. And once that's done, you have everything done. So this is how it works. You pay the student loan off, the credit card off with an extra $500 a month budget, and you take that money, pay off the student loan, and then you take that money that you're paying for both those bills and the $500 and pay it to the car payment and pay that off, okay? You're 100% debt free, probably 2 to 3 months earlier than our debt program, but that's all you have. You don't have any tax-free money that you can use to become basically your own bank. Here's the one thing I want you to understand. Einstein says compound interest is the eighth wonder of the world. People who understand it earn it, and people who don't will pay it. Because understand this, once you pay that money to the financial institution, that money is gone for you. It'll never compound for you again. But if you pay yourself back to an SDIC, I'll show you here, especially design insurance contract, now it's compounding for you. But here's the thing, the problem is 99% of all Americans are paying this compound interest to the financial institutions. So what we do, we set up our snowball in action. But we have this, what we call an SDIC. And instead of taking, you continue to make your monthly payments, but instead of taking that extra $500 a month and paying towards this credit card, you pay your SDIC a premium of $500 a month. And as that grows, you'll get a text on your phone when the balance is enough to pay that credit card off. So what you do is you take a loan from your cash value, pay that credit card off, and then you'll take that money and put it right back in to your debt-free account, the minimum payment, and you just continue with funding with the $500. Now understand, you're still making your minimum payments on the student loan and the auto debt, but when this account gets up enough to pay the student loan off, you're going to get a text on your phone, and you're going to pay that off, and then you're going to put this money back into growing your debt-free for life program. And the same thing happens. When it gets large enough, you'll get a text on your phone to pay your auto loan off. Now, when you're done, you're completely debt-free, but you have money in a cash account. If you do nothing, it will take you 7 years to pay this off. A debt snowball, 3 years. But our debt-free for life account, 3.5 years, but now you've got $17,618 in a tax-free bucket of money that you can borrow from anytime you want. It does not account against you for income tax or anything else. It's tax-free money. See, here's the problem. People don't understand effective interest cost. Now, this person had $327,000 in debt. That's not the problem. The effective interest cost over here, look at the mortgage. It had a 3.22% interest rate, but a 43.08% effective interest cost. And people say, well, how is that possible? I said, well, it's not going to get to that effective interest cost until the last couple months of the mortgage. It's the same thing with all these bills. He has 25.36 effective interest cost. And I asked him, where are you going to get a return of over 25% on any stock portfolio that you're investing in? And they absolutely tell me nothing. What about your 401k? Well, there's nothing there. So what we'll do is we'll take that, and this is how it works. Paid with the minimum payments, December 2039. With our Debt Free for Life program, June 2028, we've saved $49,650. What would you rather do? You're debt free in 6 years. You paid off $327,000. And by year 9, they got $227,000 in a tax-free cash account. Now, we can help you figure out the math of why debt is hurting your ability to get ahead. You can contact me. I'm a certified financial fiduciary. My email address is right there. My phone number is 910-551-1046. Contact me anytime. If I don't answer, just leave your name and number, and I'll call you back. But here's the thing. What I want to do is I want to show you what the reports that we send out to the clients. So I want to stop this share, and I want to bring a different share up. Okay, bear with me 1 second. All right, this is an actual client. I put test on it, but this was a personal friend of mine. I went through this and I asked him about his interest rate. He said it's 2.75%. I said, I want you to fill out this form I'm going to send you, and I'm going to do a report for you. We'll have a Zoom conference next week. So I told him the $461,000 is not his problem. The problem, like that 2.75% interest rate on his mortgage, his effective interest cost is 49.76. And he asked me the same question, how is that possible, Alan? I said, again, because it's not going to get down to the 2.75% interest rate until the last couple months of the mortgage. This is how the banks make all their money. His big problem was he was paying over 46% effective interest cost on all his bills. And I asked him the same question. Where are you going to get a financial vehicle that's giving you a 46% rate of return? He says, there's nowhere. Well, he was putting $1,000 a month into his 401k. I said, okay, take that $1,000 and put it into this Debt Free for Life program and stop paying effective interest costs in these financial institutions and compound interest for yourself and not the financial institutions. Right now, he's paying $180,000 in interest. Okay. Paid with the minimum payment, it would be August 2046. Paid with our Debt Free for Life program, June 32. June of 2032. We saved it 14.17 years faster, saving him $73,528 in interest. This just goes down. It shows when everything's paid off. It works the same way I told you just before, but this is what happens. This is a report you're going to get back, okay? This is a summary. Although he saved $73,000, he's accumulated $130,744 in a tax-free account that he can use to purchase anything and pay himself back, basically becoming his own bank, paying himself compound interest and not the financial institutions. And this is a specially designed insurance contract. I have different lenders that I use. This one's with Ohio National. I use Emeritus and other companies, but I want people to understand there are ways out there that can change your life. It's all a matter of education. So please contact me and we can get this started for you, because debt affects over 84% of the people in the United States. We have over $17 trillion of personal debt. I'm very, very passionate about what I do because people need to be educated. They need to know that the financial strategies the wealthy and the banking institutions have been using against us for years. I hope you enjoyed this short presentation, and I hope to be talking to you soon. Thank you.